a tone to prepare the market for a rate hike, and the latest data points to mounting inflationary pressures, a strong case to support monetary tightening. September's consumer price inflation rose to 5% year-on-year, driven by increases in fuel, food, housing and utilities. In addition, the local economy has been subjected to several supply and demand disruptions since the onset of COVID-19. The petrol price will likely go up by about 98 cents per litre next month, the price of diesel by 141 cents per litre. This is starting to stoke the inflationary fires. Central Bank Governor Lesetja Kganyago says South Africa will not hesitate to raise its benchmark interest rate in the face of persistent inflationary pressures.
Should there be a risk that the rise in inflation is persistent and not transitory, there is no question that a policy will have to adjust. Whether you are behind or ahead of the curve is always going to be a judgment call. It's never an easy thing to do. But what you can't do is to act preemptively or hastily in a manner that chokes the nascent economic recovery.
The bank has maintained its repo rate at 3.5% to support the economy amid the impact of COVID-19. Now, some economists expect the bank to move in its next MPC meeting. The market is pricing in a 25 basis points hike in November. What's concerning is South Africa's low growth environment coupled with rising inflation.
And as the situation stands now with what is happening with energy prices, what is happening with the food prices, you are going to see that inflation is going to go up. And for the emerging markets, though, is that this might be combined with a depreciation of currencies. And when you have that with a depreciation of currencies, then inflation could be going up. And of course, the other is that as the developed world normalizes policy, there is bound to be a realignment of exchange rates, and there is got to be a repricing of financial assets. And all of those are also going to fit themselves into the inflation outlook.
Kganyago says the pandemic and the recovery phase thereof present challenges to financial stability. He says even technological changes will in the future change the way central banks assess economies. Nothando Makutulela, SABC News, Johannesburg.